The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tommy O'Brien, and Darrell Martin.
Welcome, folks. Tommy O'Brien, Darrell Martin, Tom O'Brien. We do appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 33, Nasdaq's up 27, S&Ps are up 6.5. We have gold down 420. You get the silver market off 30 cents. Bonds, the 10 years up 5 ticks. 30 is down 1. And the volatility continues out here, folks. You had a good jobs number in. They opened China last night. China went slightly lower in the open. Goes topside. Deviant, this beautiful thing. They let it go.
Yes.
And, you know, folks, if you haven't test drove the Nadex platform, great time to do it. Come over to our website at TFNN. You hit the banner on the top or on the side. Bring up the exchange. They'll put $25,000 paper money into your account. And, of course, every Monday, every Friday, we do the show at 10 to 11 Eastern Standard Time. You can follow us on some of these contracts. Now, Darrell has an amazing scanner. And you can test drive that right here, right now, by coming over to our website. We're going to be walking through the scanner. We're going to be walking through a couple of these different contracts out here as to how they trade. Darrell Martin, what's going on?
How you doing, man?
Doing great. You having a good day?
Yeah, it's already starting off pretty good, pretty nice. Got a NASDAQ is pulling on back down now.
Yes.
So right off a deviation level and pushing on down as well as the rest of them. And so we're going to see how this ends up, but it's looking like it's going to be a nice trading day.
No, big time. And can we, you know what I'd love to do, maybe if we can kick this off, you know, when the last time we talked on Monday, we were talking about marrying these contracts with the futures, okay?
Right.
You know, so if we can walk through that, because what we're going to talk about, folks, is this, is that you can't do this overnight. Well, it doesn't seem to work overnight because there's not enough contracts. But during the daytime, if you are trading...
You can do it at 6. You can start it at 6.
You can start it at 6 at night?
Yeah, you're going to be paying a little more premium because you're paying it for a day instead of like a few hours. But yeah, you can do it then.
Okay. So if you can walk us through how we would do this, because this is something that I actually want to do intraday. Because in a highly
I don't know what you're talking about yet. I was on the show. Would it marrying the contracts? I just don't know.
In a highly married calls and married puts, but using Nadex for intraday trading.
Okay.
Right. So that. So let's walk through a trade. If we can walk through a NDX trade, that would be cool. Okay. So what we're trying to do is walk through a trade with the volatility and say, okay, that you can reduce your risk by using some of these contracts if you're trading futures simultaneously on these spreads. You know, because if you trade, I think the way this is working, what I kind of got to understand when we talked about it, is that you could give up some premium, you could give up some profits, but your losses would be dramatically lower.
Basically, you get to take a very large stop loss with a very small risk.
Yes.
Yeah, it's a slight hedge.
And it's a pretty massive hedge.
Right, as in you're just risking a very slight amount, right? To cover, yeah. And
you know, Friday not being as big of a difference, but you know, like if you go over to, you know, if you like start on Monday and you want to do this, you gotta, you know, if you're trading the futures market and you want to do a married call or put,
okay.
I mean, you have to be doing a weekly contract.
Okay.
Right. So whereas Monday, Tuesday, Wednesday, Thursday, Friday, we got intraday contracts, we have daily contracts. And so, you know, for those who understand options out there, you get much higher gamma, much lower theta. So it's a cheaper insurance policy.
Yes.
And it covers you more and faster.
Right.
Is what it means. So right now, if we were wanting to go in, I was going to pick Russell because it was just sitting as settlement. But
okay, no, pick whatever you want, and I'll follow it. I can.
We're looking at your scanner. We have it up there. So,
it'll be the same concept.
Go for it.
I'm just trying to really get my head wrapped around the concept. You know what I mean?
Okay, because Russell's like sitting right at where it was like last night, pretty much when it opened. So that's why I was going to see if there's going to be a really easy one there.
Okay.
There may be one on any of them. Okay, Russell's sitting like at 1057. Okay?
Yeah.
Okay.
So you got like one example would be a 1060 that you could buy.
Okay.
Okay. And if you bought it for 1064, it's at 1057. That's 7 points. Yeah, that's probably a larger risk than you may want to take for the full daily.
Because you're paying 7 points out of a 30-point spread there, right?
Your risk when you put this strategy on is you're risking the difference between where you sell one and buy the other.
Okay.
Okay, because the worst thing that could happen is, let's say you go short the Russell.
Yeah.
Okay. And then it flies up. So where is your hedge going to kick in?
Right.
Sure.
Okay. It's really going to kick in. I mean, it'll kick in a little bit along the way because, it'll just be moving slowly to begin with. But, like, as far as the full 100% hedge, as of expiration, okay, just, sort of taking all the complexity of premium and how fast things move out of the way and just making it really simple. If the market just flew way up against you, then it'll kick in on this one like at 1064. Okay? So this may be more risk than you want to take or not, but check out the power of this. If it's at 1050, I would say 1058 to make it easy.
Yeah.
Okay? And 1064 is where we buy this 1060 to 1090. That's 6 points of risk. Okay?
Yes.
Now when we get back, we're going to talk about how massive of a hedge you're getting in that process.
Perfect. Yeah, and this is, and folks, the Dow, from the jobs numbers to where we are now, we just went from like 160 up to flat. So you stay right there. Darrell, Tommy, and I are coming right back. The Dow is flat, Nasdaq's up 20, S&Ps are up 4. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien, Darrell Martin, Tom O'Brien. We do really appreciate you growling and prowling with us out here. What we're talking about, folks, is that we're talking about a strategy that you can use in a highly volatile market, which we have. You know, today, depending on what time you're looking at the market, you had futures go from basically 5 or 6 up to 10 up to over 20 up, back down to 0. So what we're talking about is that how, if you are in fact trading futures, you can hedge and give up some premium inside using the Nadex platform and in order to basically lose less and make more. Okay, go ahead.
All right, so what we got here, and this is sort of cool because the market moved up a little bit to give me just a more prime example. And you know, as you get this down, you can apply it a lot easier to everything. I'm just trying to keep it simple for the teaching it to everybody. And so let's say you want to go short right now. Market's come down on settlements, bouncing off of it. You think it's about to hop on back down.
Okay.
Okay? And for whatever reason.
Yes.
And we have a spread right here. And what I did is I froze the screen so the price would change on us every 5 seconds.
Okay.
And we got a 1060 by 1090. Okay? And the market's basically at 1059.6. All right?
Yes.
What this means is that spread can make money up to 1090. Okay?
Yes.
So, meaning it can't make any money past it. It'd be at max profit. It's not that it loses if it goes above 1090. It's just that it hits max profit at 1090 or higher.
Sure.
Okay? So, if I buy that spread at 1065, and it can go up to 1090, then I have 25 points of profit potential. Okay?
Yes.
So on one spread, that'd be $250.
Okay.
Now, every spread on Nadex takes in $1 tick value.
Right.
So I'd need 10 of these.
Okay.
So $250 is the maximum profit potential on that spread. I buy 10 of them. Okay?
Yes.
Now my maximum profit potential is $2,500.
Okay.
All right, so not bad. I'm risking a maximum of $500 to do that on that one trade.
Yeah.
Okay. Now that's just a spread by itself.
And we're talking about the Russell 2000 here, folks.
Yeah, Russell 2000.
Yeah.
So basically, I bought 10 of them, so that way I'd get $10 a tick, like I do in the TF futures contract.
Yep.
Okay. Then I'm taking on a risk of $500 for the potential to make $2,500. We've had some wild swings. I don't know if I'll make that much or not, but that's just, I need to know that I would have, this would make money up at 1090. The reason that's important is I'm about to go short at 1060 on the Russell.
Right.
Okay? And the risk is between where I sell the future and where I buy the spread.
Okay.
Or where I buy the future and sell the spread.
Sure.
So if I sold the future, and I get 1059.6, but just to keep the math simple, let's just say the Russell's right at 1060.
Yes.
Okay? And it says that the offer on it is 1065, right over here.
I got it. Yep.
Then that's a 5-point risk.
Right.
Okay, so basically the $500 I'm risking on the spread anyway. Okay? So, but that's a 5-point risk. And so if the Russell went up and expired like right at 1065, I'd lose 5 points on TF and I'd break even on my spread.
Yes.
Okay? If it went up to 1062.5, I'd lose 250 on the Russell, and I would lose like 250 on the spread.
Okay, cool.
Yes. So like right in between that zone, I have a $500 risk.
Right.
Okay? Now, if it goes up to 1066, then I'd lose, $600 on the Russell, but I'd make $100 on the spread because I got 10 of them.
Right.
Okay? If it goes up to 1070, I'd lose $1,000 on the Russell, but I'd make $500 on the spread. Because 1070 is 5 points higher than where I bought the spread at 1065.
That's right. So, and what ended up happening is that you'd be looking, you're putting the spread on, you're saying, okay, you're hoping for more than 5 points down, because the 5 points down is your break even. After that, you're making money. So you're making money on the downside. You might be flat. You're insulating your top side. And what happens in this particular trade, folks, is that the Russell, 30 points in the Russell is like insane. That's a big spread.
Right, that's a massive spread. Now, and you can use the intraday ones as well.
Yeah.
I'm just using the biggest example to make it really clear and really simple.
Right.
But and a lot of times I do use the intraday. Just most of my trades last like 30 minutes to an hour.
That's why I want to wrap my head around it, because when we were talking, I guess we were talking on Wednesday, that the intradays seem like, wow, man, this is a nice deal because you're not paying for the time. A lot of times I get them like 2 points away or 1 point away. Yeah.
I mean, this is 5 points because we have a lot of implied volatility in the market right now. So, but here's what we got. So why would somebody do this? Well, one, looking at that chart that I have on the screen, I mean, it just hit 1065 minutes ago.
Yes.
It would take nothing for it to go 5 points against us. It's already been up 1065, 1070, today.
Right.
Okay, so even if I put my stop there, as an honest trader, I'd still be a little nervous at having my stop at 1065.
Sure.
Like I still see a high probability of that being hit. I'd be sort of tempted to put it just a little bit above that recent little swing high at 1065.5, right? I mean, that's very, very simple. I'd want to do that. Or maybe even higher, or no, I'm just going to keep it really tight. Either I'm right or I'm wrong. I mean, that's the other option. So, and here's what happens, right? Your heartbeat starts going, because you're nervous when it starts beating, and all of a sudden you get 1060. Then, because when we got off the air, it's like at 1058, right?
Yes.
And then it went 1059. Then it went up to 1060.
And it's gone as high as 1074 today, too, folks, okay? When the jobs number come out, it spiked, which inside the Russell 2000, that's quite a move, Yeah,
and the Russell's actually the faster out of the 4 major U.S. indices usually. A lot of times it moves, it NASDAQ like the race.
Yes.
But it's worth more money per tick. So
yeah, $100 a tick, I think, right?
Yeah, $100 a point, $10 a tick, exactly.
Right.
And so looking at that, I'm like, okay, so if it does get up to 1065, if I'm just trading the future, I have to go, am I going to get out? Am I going to not set my stop loss, but be ready to, which means I usually end up posing myself, okay?
Yes.
Because I'll stay in the trade too long and I'll let my runner lose.
Yeah.
Or it'll work, and then next time I'll do it and it'll really wipe me out, how that game goes.
Yes.
If I do get stopped out, do I go the other way? And then all of a sudden, what if I get stopped out by a tick and then it comes back in my favor? Do I hop back in and risk all that money again? All those games we have to play as traders. Okay?
Sure.
So I can put this on and go, worst case scenario, if I don't get 5 points of movement in my direction or more, okay, I have a $500 risk. Now there's a lot of ways to take the risk down on this. And, we can talk about that.
It's
but just to get the concept down, but $500 to have a $2,500 hedge and have no cap. And this is the big thing. Some people go, well, with spreads, they don't move as fast, and you got a cap on how much you can make. And what if the Russell does drop 50 points today? Well, you have no cap. I'm free to the downside.
Right. You're free on the strategy that you think the market's going to go to, which is
the one that you're trading already anyway.
And then, it's really intriguing there too, folks. Okay, if you get what you wanted in the futures market, you close that, and then you get a trade inside the Nadex platform that is still going on.
And I'll show you how to do it the other way when we get back. I'm going long.
You stay right there, folks. Tommy, Darrell, and I are coming right back. Dow's up 49, Nasdaq's up 32, S&Ps are up 10. We're going to be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien, Darrell Martin, Tom O'Brien. We do appreciate you growling and prowling with us. And don't forget, folks, this show is on every Monday, every Friday, 10 to 11 Eastern Standard Time. Which is really sweet is that, of course, on a Friday, you're closing down the week. On Mondays, you're kicking into a new week. There's no doubt this week between the markets.
We have plenty to talk about, don't we?
Yeah, we do.
We do.
We do.
We do, for sure.
So, Darrell, oil cracked this week. We had the markets cracked this week.
The jobs number just came out this morning, which we haven't touched on. That was 290,000+, right? Going over the exact numbers that it beat it, just so people know what's going on, for sure.
Good jobs number, no doubt about that. So when we finish up, the weeklies, like let's say that we're coming into this weekend. You had China turn around and basically hold the markets last night. So when we're kicking off the week, how do you like to kick off the week?
How do I kick off the week?
Yeah, meaning,
I don't trade the weeklies.
You don't trade? Okay.
It's a $100 binary.
Yeah.
And I sort of had the mindset of why would I wait a week to make what I can make in 10 seconds?
Okay. Okay, cool. Right.
So to me, it's cost of opportunity lost.
Yes. Yes.
Here's a couple trades from yesterday that I did. Let's see here if I can zoom them in. This one made $690, and if I can make the zoom work, whoa, it worked now, don't it? Let's see, I got in at 6:10. I got out at 6:10 and 44 seconds. I got at 6:10 and 56 seconds. So literally it's a 12-second trade that made $690. And trading the binaries.
Trading the binaries. Oh, interesting, man. Okay.
Yeah. It's tough to see that, Darrell. What level were you in at and out at? Were you just oscillating right around 50 or?
I mean, I bought 40 contracts on that one.
I just can't see the prices. So right around 50.
I got in at 48.75 and I got out at 66.
So yeah, right around 50. Nice. So it'll have some nice.
So because I mean, they really oscillate a lot.
Right. No, that's what I was anticipating to have it move that quick in that many seconds.
Yeah.
And then I mean, here's one that took about 5 minutes. Held
there
this
we
one
go. We
held
can see
expiration. This one I got in at 16.11. The time.
Yes.
Sold 10 of them at 67.50. Went to expiration. Expired at 64.07. Well within, the money. And so $1,000 payout. The difference between the risk and the payout was 675. These are two trades I just did at the end of the day yesterday. So I mean, I do trade the binaries. I love them, but I change them fast.
Yeah, you have.
I don't really trade the. I mean, you can trade the weeklies. I mean, it's just a delta. So there's a lot of cool ways to trade them. You can trade them, against spreads, all sorts of cool stuff you can do. But my binary trades are quick. So because there's so much all or nothing, I don't have the. I don't know. It doesn't fit my personality, and I think it's an important part in trading. Is I don't like holding positions. I like getting in them, and I'll hold them for a day. I'll be in them for the day. But when I go to bed, I like to be flat. So
you know what's amazing is that there's no doubt that is the mantra on a day trading aspect. Even in the equity markets, I would say that the reality is so much better that in the Nadex market you really are flat at night, and it has to do with the contracts are the contracts. You know what I mean? As I was thinking about this the other night, I've been day trading for a long time, and everyone says, "Yeah, you're going to be flat." Well, guess what? For the amount of times that you're flat versus not flat, it's a lot. You're not flat a huge amount of time.
Sure.
And in the Nadex platform, you are flat because it's those contracts expire.
Yes, it's an option market, right? Where you have defined risk, and so in that capacity, you can let them expire, and no matter what, your risk is at least defined, which is, I think, what you're even talking to more, where you're.
It is.
Well, and here's another benefit going back to Ultimate Hedge. Is I said you could buy the shorter contracts.
Yes.
Shorter term contracts. Like right here. Okay, here's one on for noon. Okay. And it's basically a pretty similar setup. We're at 1058. You can buy at 1060.3. This one you have a $230 risk. Okay?
Yeah.
And you have a $470 profit. It'll cover you up to 1065 on this one. Okay? It'll only cover you for an hour and a half. But if you've already moved in your favor and you're trailing your stop,
okay,
it doesn't matter that the hedge expires.
Right.
You only need the hedge until you've trailed your stop to lock in enough profit to more than cover that hedge. Right?
That's interesting. Yeah, right.
Because some people are like, well, I need the end of the days. And I'm like, well, really? I mean, once like this one, once I've gone past 2.3 points, which I mean, it did like 3 times during the commercial break. Okay. Once I've done that and I'm trailing my stop down, obviously I want it to go a little more than that before I trail, so I'm not too tight. But once I've trailed my stop down to cover the cost of my insurance, then the insurance is just there. So if I trail it down, and it expires out, I can keep trailing the contract. I don't have to stop trading. So some traders are like, well, if I use those hedges, then I have to, cut off. And some traders, they want to trade it, into the evening, stuff like that. Well, you're already in profit. So if you just want to keep trailing your contract, you can keep trailing it. Or, you want to keep trading past 12. Well, it doesn't matter. You got your, your order sitting right there above the market. Your stop loss order, sort of stop profit at this point order, sitting, let's say you're down at 1050, and let's say you have a stop profit at 1055. Okay. Well, you've locked in 3, 4, 5 points of profit, whatever, and you just keep moving it down. It doesn't matter that your contract expires. So that's sort of I'll hear the argument that, they expire, and so that's why I don't like using them as hedges or this or that or whatever. But it's like, well, once you're trailing your stop, you don't need the insurance. So just something I thought I'd bring up.
No doubt.
And then also to show an example of it risking half as much, and that's for a hedge for the next hour and a half. So basically from now till noon, do you think it's going to be able to break down and drop a couple more points? Is what that hedge is saying. So because I'd sell at 1058 and I'd buy at 1060.3, I'd have a $23 risk, or 20, per contract. And if you want to make it even cheaper, so a lot of people were still looking at they're hearing $230 because they are tearing contracts. You go to NASDAQ, it's $20 a point, not $100 a point. You go over to FX, if you're a spot Forex trader, it's $1 a tick.
Okay.
So, like, Aussie dollar, euro dollar, pound dollar, great moves.
And the currencies have been moving quite a bit, no doubt.
And so you can go and you can hedge these for $1 a tick for a mini lot of 10,000 units of currency, right?
Sure.
So $23, it could be $23 of risk. But now you get 23 plus 47, we got 70? So now you have a 70-point stop loss with only 23 points of risk, 23 pips of risk. And that's what, I used to call it, stop losses for pennies on the dollar. Because, you're risking 23 pips, but you're actually getting 70 pip stop loss. Or that other example we gave, you're risking 50 ticks to get 250, actually a 300 tick stop loss on the Russell. So you get these massive stop losses with these small risks. You can go in, your heart's not beating because it moves a few ticks against you. It's like, hey, if it gets up to the ceiling, I'm going to get out of the trade, But I got a long ways for it to move before it gets there. And you can do it long and short.
You stay right there, folks. Tommy, Darrell, and I are coming right back. Dow right now is up 20. Nasdaq is up 18. S&Ps are up 5.5. And this market's having a tough time holding a bid out here, folks. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Tommy O'Brien, Darrell Martin, Tom O'Brien. We do appreciate you growling a problem with us out here. Right now, you get the Dow up 21, Nasdaq's up 16, S&Ps are up 5.5. We have oil down 20 cents at 33.07. Gold is down 560 at 11.02. You know, I just read this article on Bloomberg. This is pretty intense. So, gold, you know, people look at ratios. Andy talks about this a lot. The ratio between oil and gold, and the oil.
They're all of them, right? Gold, silver, gold, platinum.
Silver, yeah. And listen to this ratio. This is sick. Right now, the 33 barrels of oil only cost 1 ounce of gold. That's the biggest ratio since 1988.
Okay.
And that's a 33-to-1 ratio. Now listen to this. The average, now it said average. I didn't find out whether that average is from 88. It didn't say, it just said average. Is 16-to-1.
Sure.
Isn't that intense?
Yeah. And that could make sense. You can see because oil was just at $100 a barrel, right? And gold was just at $1,600, right around that time, probably.
Right.
As it was.
Right.
I mean, it was.
Oh,
right?
yeah. No, I know. That's pretty amazing, though, man, right?
That's a lot of change going on in the world, though, in terms of oil. So that's where things really change. It's like oil's been the driver of energy forever.
Right.
And that's changing. It is, you know, let alone the world in terms of economies, and that definitely affects everything in terms of trying to slow down for oil. But just that, I mean, that ratio didn't used to factor in natural gas, right? It didn't used to factor in solar. I'm just going to, you know, that's...
Oh, listen, well, listen to this number. You're going to crack up. So, folks, this number, when I was driving in this morning, this is the first, 2015 is the first year in 48 years that the ratio of oil companies, didn't, meaning making money, didn't go up. Goldman Sachs put a report out. In 48 years, that's pretty amazing.
It's been a rough year.
Yeah, no, exactly. Yeah. And I guess in that context too, that the world has been growing, you know, every year.
I think it's more. Well, I think oil's just really shocked a lot of people that it could go this low, and that's what. So a lot of companies, when they thought they were planning for the worst case scenario, like many things in the market, you know, the never say never.
It got worse.
I think a lot of them said, never are we going to have to deal with for an extended period where oil is below $40, let alone below 35, and it's hanging out.
And let alone, you know what's amazing about this too, is that the $35.35, which was the low of 2009, you know, I could see it hitting that, right?
Sorry, what was the low?
$35.35.
Okay.
You know, now it's at 33.
Right.
And when people were saying it could go to 20, I'm saying, say 20, man, that sounds insane.
Right. So when you talk about
but now
profitability especially, like they're still alive, right?
Yeah.
The stat was profitable. Is that what the stat was? What would you say?
For 48 years, this is the first year that the earnings didn't go up in 48 years.
Okay, yeah. So that's it. You know, earnings especially is going to matter when the price of their only product goes below they ever thought it could.
Yeah, no doubt.
They're not going to be earning.
Let's go to Scott in Colorado Springs. Hey, Scott, what's going on? You there, Scott?
Scott?
Nope. He's doing a trade.
Skiing down the mountain.
Oh, I'm sorry. We got Mike in Dallas. Hey, Mike, what's going on, brother?
He ain't skiing.
How are y'all doing? Hi, Darrell.
We're doing great, man. How you doing?
Doing great. Listen, Darrell, one time you had mentioned that you didn't particularly like doing spreads on the DAX. And I have found that the DAX and the NASDAQ really move similar. And I'd like for you to comment on that, or maybe I misunderstood you.
It's just they move slower. So it's not a horrible thing. Basically, they tick in a value of 1. Okay, whereas the DAX ticks in 0.5.
Yeah.
Right? And it's worth 12.5 euros, which I don't know what that comes out to, like 13.50 or something now.
Right.
Give it another couple weeks, maybe it'll be on par. But anyways, right now, so basically you have to do about 13, 14 Nadex spreads to equal 1 DAX future. Now, to a lot of people, that may be a good thing because they don't have to risk, you know, $13, $14 a tick right now. And so, you know, so it's not necessarily a, you know, horrible thing. They can risk $1. But understand the DAX, you have to move 2 ticks for you to see 1 tick change in your contract. Now, it's only a 3-tick wide spread. Right. Okay, but that's really 6 ticks on the DAX.
Right.
Okay. So it's just more that I'm a lot of times I'm drawn to the ones that tick faster than the underlying market, like NASDAQ, S&P, corn, soybeans. They tick in 0.1, where the underlying market ticks in quarters.
Right.
Okay, so dimes versus quarters. Whereas on Nadex, on the DAX, I want to say on the FTSE, they tick in dollars, whereas those markets tick like in 50 cents.
Exactly. Okay.
So it's not that it's a bad market. I do love trading the DAX. A lot of times when you see me trade the DAX, you'll see me trading the futures. But that's also a lot of that's a lot of bread to put up. So for a lot of people, I mean, DAX it's a heavy contract. So it is a safer way by every means to trade it. Just understand that the DAX just moved 2 ticks. Why didn't mine or moved a tick? Why isn't it moving? It'll move a little bit slower just because it ticks half as slow. So, but it's also only $1 a tick, so that's a benefit.
Right. Okay. Well, thank you very much for your explanation, and I hope all of you have a wonderful New Year and a great weekend.
You also, Mike.
Thanks, Mike.
Have a great one, man. Have a safe one. And don't forget, folks, inside that Nadex platform, too, we're just talking oil. Well, it trades oil, it trades gas, natural gas is a great.
So many, for sure.
Is a great.
Talking about commodities, right?
Exactly.
Indices, Forex, yeah.
Right. Let's go to Scott in Colorado Springs. Hey, Scott, what's going on?
Good morning, guys. How you doing?
Doing great. Yourself?
Good. Thank you.
Good. What was your question?
Well, I had a question. Darrell said he's in and out of trades within seconds. And my question is how is it in a fast market you're doing that? Because you have the bid ask to get over also, right?
Well, you have the bid ask to get over, but you have a contract that can move from 20 to 80 in 3 ticks.
Okay.
So it's not that hard to get over the bid ask.
Okay.
I mean, if you were talking about a stock that had like really wide bid offer and it was moving at a delta of 1, but when these things get close to expiration, the binaries are a delta, literally. It's the delta of a call option.
Right.
Okay? That's like the actual pricing model, all right?
Right.
So at expiration, the binary has to be at 0 or 100.
Correct.
Okay? Just like a delta has to be at 0 or 100 at expiration. It's either on the money or it's not, right?
Right.
So when you get within that last 5 minutes of expiration, that thing's jumping up and down as it revolves around the at-the-money strike.
Yeah.
Okay? Because that thing is, like, am I going to be 100 or am I going to be 0? Am I going to be 100 or am I going to be 0? So it'll go,
right.
I mean, it'll move really fast. I mean, on that one contract, I didn't make a whole lot. I just had 40 contracts. I made like $16 a contract, know. But, I mean, I made it in like a tick.
Okay.
Like one tick of the underlying market didn't move like $16 past the bid offer spread. So really like $24.
And even you said, Darrell, like 20 to 80, but I've seen them like 35-40 to 60-65 is like a heartbeat. And that's why I saw yours was like 48 to 64. So that's really just one side of the market to the other. Immediately it shifts.
Right.
Yeah,
and when you want to do that, if you do something like that, once you get it, you got to put the order in the other side right away. Definitely. I mean, because it takes back.
12 seconds. It was like quick.
Yeah, exactly. and when you do the other side, folks, it doesn't mean you're going to get it either.
Just have your trade in there.
Right, exactly. Right. You stay right there, folks. Tommy, Darrell, and myself. Thanks, Scott. Have a great one, man. Have a safe one. We're coming right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Darrell Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is up 25, Nasdaq's up 11, S&Ps are up 450. We got Ron in Denver, Colorado. Hey, Ron, how you doing?
Very much for your show. Thank you very much for your show. Anyway, my question is, I like to buy options, but on the big quality stocks like the Googles and Netflix and Tesla and so forth.
Yes,
they're so expensive. So what I do is spreads to bring down the cost.
Okay.
My question is, what time frame is best? Is it best to do a spread maybe 2 weeks, or a spread of you go out a month? And if you go out long and the stock makes a move, you don't capture the move because you got the spread. And I just wondered, what's your thoughts on that, time frame wise, on a spread?
That would be a great... Okay, so what Ron's talking about, folks, he's not talking about Nadex spreads. He's talking about spreads in the equity market. And that would be a great question for swim lessons at 12.
Sure.
You know, you can give him a buzz.
Because it's a multi-layered option, right?
Right.
Yeah.
Okay, I apologize. I'm sorry.
Don't. You know, it's so cool.
I wish I had the answer. That's why I listen to swim lessons.
Right. It's great. I mean, if you have never used the Thinkorswim Analyzer tab, I mean, it's in there, but... You know, that would be the question. Those guys are just in Cindy. It's a great program. Yeah. It's on every day, 12 to 1 Eastern Standard Time.
And Ron, what you can do actually is you can just email them, swimlessons@thinkorswim.com, and they'll answer it live on the air.
Thank you.
Email them right now, man.
Yeah.
They might answer it today for you.
They will. No, they will. It's not. They're actively looking at it even during the show. So I'm curious myself.
Cool, man.
Yeah.
Have a great one. Have a safe one, man.
Ron.
Thanks so much. So, what do you think over the weekend? What's gonna happen Sunday night?
Oof. I don't know, but I'll be watching.
I hope a repeat. That's what I'm hoping for.
Yeah, I'll be watching. It'll really be interesting, I think, to see.
With like 500 ticks, like on the Open Sunday.
I was just gonna say, like, how China comes out of this, right? Because it doesn't really make sense that they hit the 7% marker and then they do away with the circuit breakers and they open up the next day and everyone's like, all right, yeah, we're cool, you know, we'll just like bounce a little bit and like pretend like that didn't happen. And so there'll be more volatility coming out of there as people figure out whether, because who knows what the government's doing over there in terms of maybe propping that market up even when there's massive, you just don't know what's going on.
Really. That's right.
So,
that's right.
And they can't.
I think they just pick an idea out of the hat like once a week or twice a week.
Right.
that's what pops up.
That's what,
there's not really any committee meeting going on.
And for that type of volatility, with them making those decisions that are affecting the market dramatically,
we
right?
just shut down. Let's just close down that shutdown.
Yeah, and then the next day, all right,
let's
no
go to a
more
free
closing
market.
it down. No more closing it down. And then somehow it's like, okay, then, yeah, if you're not going to close it down, we'll just trade very low volatility then. No, that's not how it.
So it had like 2 close downs last week, didn't it?
Right,
It had
yeah.
like 7% on Sunday and Thursday.
Yeah, it was Monday, right? Was it Monday or Tuesday, and then
and then
Thursday?
they do away with the rule.
And then somehow everything's cool. Yeah.
It's going to go down 40% next week.
Right?
Well, if
you don't know.
if they ever do the circuit breakers that we have, that's pretty intense.
If they're down anywhere near that, the rules are going to change again. That's what they probably said. They said. Can you imagine being in that meeting, being like, what if we do away with the 7%, and all of a sudden we find ourselves down 15%? And somebody in that meeting says, we'll just have another meeting and we'll just change it again. Let's see what happens.
And what's so wild, of course,
we'll just reset the day backwards. And
exactly.
We'll
it's pretty. I mean, that's the.
and you're talking about a central planning committee that is used to controlling everything. So this is a whole different animal.
It's not that they used to. They
do
want to control. Yeah,
right.
They do. Right.
They
got a free market with that. So yeah.
Right.
I mean, well, not completely free, but pretty free.
Pretty free.
They don't.
And
they're
that's
not
why
controlling every buy and
you
sell.
can't control. Right. You can only.
It's free as long as it goes up and goes where they want it to go.
There's too much money at stake for them to really control everything. That's what happens.
There was $2 trillion lost.
Yeah.
Okay. Worldwide as of yesterday.
Yeah.
I can see this 7% rule fell. We'd not do that anymore. Yeah.
With the T. You stay right there, folks. We do appreciate you growling a pile with us. I'm Mr. Basil Chapman's coming up next. Swim lessons. Steve Rhodes, Dave White. I'll be back this afternoon. Have a great one. Have a safe one. Thanks, Darrell.
Thanks, Darrell.
Thanks, Bill.
man.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.